All right, good morning, guys. This is Pips of Africa here. I'm back with another video. So here I'm looking at the EuroCAD. So on EuroCAD, I'm going to be talking about just a few things here that must be taken care of before looking for order blocks. So the first thing that we have to do, I'm going to show you what we have to do. The first thing that you need to do here, one, you need to check the market structure. You need to check the structure. One, I'm going to be writing the structure. You need to take note of the structure. That's number one. Number two, you need to check the order blocks. You need to check the order blocks, OBs. Then number three, you need to check where the price has taken the liquidity. You need to check where the price has taken what? The liquidity. Liquidity zones. That's number three. All right, so number four. That's number four. Number four, you need to know where the price has created equal lows or equal highs. You need to know where the price has created equal lows. I'm going to write the equal lows and equal highs. So these are the four categories that need to be taken care of. First one is the structure. You need to analyze the structure to see to find your directional bias. Number two, the order blocks. Number three, liquidity. Number four, equal highs and equal lows. So let's get into the chart and see what is happening there. All right, there's another thing that I want to talk about in this video. Number four, okay, how to trade the Wyckoff schematic, how to successfully trade the Wyckoff schematic, how to trade the Wyckoff schematic. I'm going to be giving you the tips on how to trade the Wyckoff schematic, the tips on how to trade the Wyckoff schematic. Number one, you must know where the liquidity is in the market. You must know where is the liquidity in the market. Let me write it like this. I'm just trying to save time. Know where is the liquidity in the market. Know where is the liquidity in the market. Right. So number two, let me try to correct this error here. The market. Number two, you need to know how to label Wyckoff schematic. Number three, you need to know how to trade, how and when to trade, when to take trade based on Wyckoff, schematic. Those are the points that I will be showing you in this chart here. Number one, you need to take care, you need to check the structure to know if the market is trending to the upside or to the downside. Number two, you need to check the order blocks, or you need to find all the order blocks. Number three, the liquidity. You need to check where is the liquidity that the market wants to take, that has to be taken out. And number four, you need to check the equal lows and equal highs. And then the last part, or the final part, is this: how to trade Wyckoff schematic. These are the tips. Know where is the market trending, where is the market trending? I wanted to say, okay. Wanted to say where is the liquidity in the market? Where is the liquidity? Liquidity in the market. That's what I was trying to say. Number one, know where is the liquidity in the market. Number two, how to label the Wyckoff schematic. Number three, which is the final point, know how and when to take trades based on Wyckoff schematic. Know when, know when to take trades. To take trades based on Wyckoff schematic. These are the points. Number one, you need to take note of to check the structure, market structure. Number two, order blocks, mark them all. Number three, liquidity zones in the market. Number four, equal lows and equal highs. Go and lab and mark all those equal lows and equal highs. Number the second category, we need to check. I need to teach you how to trade Wyckoff schematic. These are the tips. Know where is the liquidity in the market, and how to label the Wyckoff schematic. Number three, which is the final part, know how and when to take trades based on Wyckoff schematic. So let's get into the chart. All right, so now let's quickly check to this weekly chart. You can see that in the weekly chart, the monthly chart, we're currently on the monthly chart. By the way, this is EuroCAD or Canadian dollar. Now, the market is currently trending to the upside. From this point up to this point, you can clearly see that the market is trending where? To the upside. So now I know that the structure is bullish. The structure is currently bullish. Now, we might go up there. So if I were to mark up this zone here, this is the recent high. Okay, this was the recent high or the previous high. So I currently see the liquidity above there or the equal highs. I see the equal highs, meaning the price has to push to the upside to clear this liquidity here. I see the equal highs here, which is the liquidity zones. So the market has to push, has to go there to take all this liquidity out. Now I see this liquidity here. So this one is my point of focus, or this one will be my take profit, this one. So where to take the trade now? Because I've marked up the liquidity zones, which is this one, equal highs, and also this one, the recent high or the previous high, that needs to be taken out. You mark the previous high. Mark the previous highs. This is the previous high, meaning this was the recent high. We had this higher high, higher low, higher high, higher low, higher high, higher low. Now the price needs to maintain the structure because the structure is currently bullish. Now we're bullish since then. So now I want to see where am I going to take this trade and push the market to the upside up until we take this liquidity. So the liquidity zone or the equal highs and equal lows are your TP, are your take profit. That is where you must take your profit. So now let me go down to weekly chart and see what is happening there. All right, so now what I see on the weekly chart, I see this. Okay, I see this on the weekly chart. This is what I see on the weekly chart. There's this liquidity, and also here I see this order block. I see this order block here. The price after this, after the last down candlestick, it shot to the upside strongly, creating the strong impulse. So what was the cause of this strong impulse to the upside? We can see that there was only bullish candlestick that are here. Only the bearish candlestick is here. This was the cause of this strong impulse to the upside. So I'm sorry about the edge. Okay, so now I'm going to mark up this other block. I'm going to mark this other block from here up to here. I'm going to mark them up. Let me change the color. Change the color. So, all right. So now the price, I want to see the price coming back down here. So for the price to come back here, it has to distribute. Let me repeat. For the price to come back down here, it has to distribute. Let me repeat again. For the price to come down here, it has to distribute. So what I see here is the order block. Somewhere here, this was an order block. Let me try to mark it up once again. So this was an order block. This was an order block. All right. So this is an order block here, meaning the price is from this strong order block, which is this one. Now it has to push to the downside. Now I have to go down to 4-hour time frame and see what is happening there. You can see that the first thing that I did here, I marked up the structure. I saw that the structure is bullish. After checking that, I went on and checked the equal lows and equal highs. This is the equal low, equal highs that I saw. So I marked it up. I also marked the previous high that needs to be taken out for the structure to remain bullish. So for the structure to remain bullish, the price has to move to the upside and take out this previous high before pushing to the downside so that it can continue with its bullish momentum. So now the price is currently leaving this other block, is coming down to this other block here, because this other block is very strong because it pushed the market to the upside. It even took out this recent high with this with these wicks. So the move, this strong impulse move, is started here. So every time when you see the strong impulse to the upside or downside, you must go back and check to where you must go back and check where that strong impulse initially started. It started here because we had that small bearish candlestick before the up move. We have this small bearish candlestick before the strong up move. So now the price has to go back and respect this other block before shooting to the upside. I've tested this other block, that this other block is indeed valid. So the price has to go down and tap into this other block before we see the big shoot to the upside that will take out the liquidity above here and also the previous high. So I want to see the market going back down here, mitigate this other block. So I'm waiting for the mitigation before I buy the euro Canadian dollar. So right now I'm gonna be buying here around this zone. Let me mark up the exact area where I'm gonna be buying this market. All right. So the exact area is 1.43270. This one. This zone here, or at this point, I'm going to be placing my buy positions here. But I need to go down to smaller time frames for entries. I'm using monthly time frame, weekly time frame, daily time frame, 4-hour, and maybe 2-hour and 1 hour time frame to analyze the market, to analyze the chart. But once I decide that, all right, now the market has arrived to this point of interest of mine, I then have to go down to 15-minute or 5-minute chart. So, but here I'm only analyzing. Don't confuse that, guys. So now you can see that here, retail traders, they sold here. Retail traders sold here. So the market went down like this. You see? So, but you can see that how to see if the momentum is down or upward. Let me show you this. You see this here? This strong move, this one. This strong move, this one here. Compare that move to this one. Compare these two moves. Okay, so you can see that this one is strong, is very strong. So this one is coming back as a retracement. Let me repeat. This move that is going to the upside is very strong. It shows you that the momentum, the full momentum is to the upside. But this one, there is no momentum to the downside. You can see there are a lot of candlesticks here. The mixture of white and black candlesticks, the mixture of or rather green and red candlestick. It shows us that the momentum is to the upside because the price is going down slowly. But when it was going up, it went down very aggressively. So now it shows me that the price is currently retracing. This is just a retracement, but I know with this strong impulse that the full momentum is to the upside. So this one is saving as a retracement. So now the retracement will end here, meaning here, this move, it must not go below this one, because this recent higher low, it has to maintain for the structure to remain bullish. So the market has to come back down here, tap into this order block before we see the big shoot to the upside, because we now know that the euro Canadian dollar is bullish. All right. So we know that it is bullish. Now, let me do this very quickly. So now we have this. The price has to come down and tap into the 50% of the order block like this. After that, the price has to push to the upside like this. This is what I'm expecting. So when you get the chance to buy euro Canadian dollar here, keep holding up until, meaning your TP must be up here. My TP will be up here according to these equal highs. Or I'm going to be removing my stop loss below here. When the price is here, my stop loss will be here. That's what I'm going to do. That's what I'm going to do. So now that's all about with this Canadian dollar. But now let me go down to daily time frame and see what is happening according to daily time frame. You can see that I started analyzing on the monthly time frame. I went down to weekly, and then now I'm going down to daily time frame. After the daily, I'm going to check the 4-hour time frame and see what is happening there. All right, so now what I see here is that here there was a liquidity. Here there was this liquidity here. Even here there was, the market was trying to take out the liquidity, trying to respect this order block. This order block, this one was valid. This one was valid, but also even this one was also valid. This one was valid, and also this one was valid. So if you have two order blocks like this, let me show you this. If you have two order blocks, this is what you must do. Let's say you have two order blocks. This is the first order block, the second order block. Then the price, it went down like this. So remember that I said this one is an order block. I'm making an example, and also this one is an order block. So the price, when the price tries to go back here, on the 4-hour, it will respect the order block like this, and then finally go back, so, and then come back down. So it will respect this order block to show that this order block is indeed valid. You see, it will respect it like this and then break it, because the main aim is to mitigate all these order blocks. You see, if you have the market makers, if they have open positions here that were not mitigated, that are yet to be mitigated, and also it has another orders that need to be mitigated here, and then the price, when it tries to go back there, it has to go back in this manner. It has to go back like this. It will respect this one like this before finally respect this one. We'll see the shoot to the downside after the mitigation of the final order block. That is why I said to you, you must mark up all the order blocks. You see, I've marked this one and also this one. As the price kept on going back up like this, I know that this is not the only order block, but above this order block, I have this order block. So the price has to mitigate this order block and pretend as if it wants to go down, and then it will go back up to finally mitigate this order block or the last order block before we see the big shoot to the upside. So that's all you need to take note of when analyzing the chart. So I'm going to be showing you this, the example of what I'm talking about here. So these are all the things that must be taken care of in order for you to become a successful smart man trader. You must not violate even one rule. You must respect all the rules that need to be respected for you to become a successful smart man trader. So now let me come to this one and analyze it very quickly. Now we have this one here. We have this one here. Let me tell you something about this. You see, we have this order block here and also this order block. If you can check on the weekly time frame, if you can check on the weekly time frame, we can go back there if you want to. You can see that this one, sorry, you can see that this one here, this move here is just a week. This move is just a week on weekly time frame, a week. So now the order block is only this one here. That's why you have 1, 2 order blocks. But in fact, on the weekly time frame or monthly, this is just one order block. That is why if you see 2 order blocks together, you must go up. You must move to the higher time frames. Let's say I'm watching daily time frame here, and then if I see 2 order blocks in the same area like this, I'll go ahead and do this. I'll go back. I'll go up to the weekly time frame. You can now see that on the weekly time frame, this is the only order block. We have this order block. We have this one order block on the weekly time frame. But when you go down to daily time frame, you will see 2 order blocks in this same zone. That is why it's very important to mark up the order block according to higher time frames. And then as you keep on going down to smaller time frames, you'll realize that in this same zone, maybe you'll get 3 or 4 or 2 order blocks in this same zone. But you must know that on the higher time frame, this is just one order block. That's what I'm trying to say. Let's go back down to daily time frame. So that is what I was trying to explain to you guys real quickly. Now, let me try to tell you about this thing. So on the daily time frame, you see this order block and also this one. Now the price has to go back up and then retrace a little bit on the forward time frame, and then finally shoot to the upside. This is the example that I was making just now. So now the price is respecting this order block right here. So you can see that this move here, this strong move to the upside was to mitigate these buying orders, because order block is where you see a sell to buy, a buy to sell, or a sell to buy. So it is a vice versa. So now the price has already mitigated this order block, trying to shoot to the downside in order to mitigate this order block and also to collect the liquidity below here. There is a liquidity below here. So the retail traders will do this. You see, according to monthly time frame, this is a support. According to monthly time frame, now the retail traders, they bought here, they were in the profit. They also bought here according to this trend line, because this trend line is from the monthly time frame. They also bought here. They made their profit like here. You see, now they will also buy here. This is where the market makers will hit their stop losses below here and below here. Let me show you that. So the smart man, the market makers will hit their stop loss here. They want to collect liquidity or to grab liquidity here. And also here, let me also check this side, or there's nothing this side. But you can see that from the monthly time frame, on the monthly time frame, I was looking only for a structure to see if the structure is bullish or bearish. On the weekly time frame, I was only there to mark up the order blocks and also check the liquidity. Where is the liquidity that is yet to be taken out? Okay, now I'm on the daily time frame. I'm also doing the same thing on the daily time frame. I'm refining the order blocks on the daily time frame. You can see if I were to refine this one, I was going to refine it like this. The daily time frame, I was going to do it like this. Perfect. I was going to do it like this. And then I was going to place a cell entry here, meaning I was going to sell there. Now the price is currently going to the downside, pushing to the downside up until this point. All right. So I said to you earlier on, for the price to come back here, it comes down for two reasons. The price will distribute or accumulate for two reasons. The first reason, it is distributing in order to take this or to grab the liquidity below this low and below this low. The second reason is this: it wants to come down here to mitigate the selling orders there. If I say the selling orders, I mean to say the sell to buy candlestick. That is there. You can see that, you can recall that this is the sell to buy candlestick. It looks good on the weekly time frame, this one. This sell to buy, it looks good here. It even broke the structure. It even broke the structure to show that this order block is indeed valid. It even broke the structure. So the price is distributing in order to mitigate this sell to buy orders. Okay, there are selling orders that need to be closed or mitigated here. There are market makers orders here or institutional orders here that needs to be closed, because these guys, they sell to buy all the time, they hedge. Okay, so right now I'm going to go down to 4-hour time frame because I'm done according to the daily time frame. I want to show you that okay, let me make an example here. Let's say we have the terminal supply, buying climax, secondary test, upper thrust, UTET. So the UTET, most of the time, you will find that here, when you look to the left-hand side, there is an order block here. So it is only the UTET that has to tap inside the order block. You can see, when you mark up the chart and then you see that here, there's an order block here. The price will distribute like this. It will create the terminal supply here. Or let me try to label it out. It will create what? It will create what? The terminal supply. Terminal supply. After that, it will create what? The buying climax. Buying climax. After that, it is going to create what? The automatic reaction below here. The automatic reaction. After that, the price will create what? Will go ahead and create what? The secondary test. Secondary test. Thereafter, the price will create what? The sign of weakness below here, the sign of weakness. When you get used to labeling Wyckoff schematic, it becomes simple. Everything becomes simple. Now we're going to be having it will create what? The upthrust. The upthrust below here, but it won't tap inside this order block. This one is an order block. Only the UTET that will tap inside the order block. Only the market makers will never use buying climax to mitigate the order block. It will only use either upthrust or UTET. If that Wyckoff schematic has no UTET, it will use the UT, meaning the upthrust. But most of the time it uses the UTET, which is the upthrust after distribution. So the price will do this, will go ahead and do this and mitigate their buying orders there. This is the order block, guys. This one is an order block. So I'm saying to you, only the UTET that will mitigate the buying orders, this order block here. So let's go back down there and see the real stuff. So let me quickly mark up okay. I want to check if there is a Wyckoff schematic here. I want to check if there was a Wyckoff schematic. All right, here I see something like Wyckoff schematic. I believe it's this one. All right, so let me quickly mark up this Wyckoff schematic. Here I see the buying climax. The buying climax. Let me change the color to black. I see the buying climax. And then here I see the, I see the buying climax has to be here. This is the buying climax, Here, this was a preliminary supply, And then here I see the automatic reaction. And then above here, I see this secondary test. And then below here, I see what? The sign of weakness. I see the sign of weakness. Let me delete this one. I see the sign of weakness. This is the sign of weakness. And then I see what? I see the upper thrust. This is the up thrust. After the up thrust, I see the up thrust after distribution. The UTET, which is also known as UTET. So, okay. So right here, this is what I see. This is what I was talking about. I said to you that this is the preliminary supply, buying climax, automatic reaction, secondary test here, secondary test, which must be below the buying climax. These two, the preliminary supply and secondary test must be below the buying climax. Buying climax must be in the middle, and then we have the automatic reaction. And then after that, we have the secondary test. After secondary test, we have to have the sign of weakness. After that, we have the up thrust. At the up thrust, you have what? We have the creek. We have the creek right here. We have the creek right here. This is the creek. All right, we have the creek. We have the creek. Okay, right. This is your creek. This one is just a trap for retail traders that are trading smaller time frames. So if they put their sell entries here, if they place the sell position here, their TP will be here or here. Then the price will then shoot to the upside, collecting all the stop losses here, or taking out all their stop losses here. And then we have this UTED. You know very well that here there is an order block here, according to the weekly time frame. There was an order block here, which I've marked it up on the weekly time frame and on the daily time frame. So only the UTED that will tap into the order block zone or order block area. So now the price is currently shooting to the downside. So I said to you that the price has to distribute in order to come down here, meaning it has to take out the liquidity here and also tap into this order block or mitigate this order block before we see the big shoot to the downside, to the upside, So the price has to come back here, has to come down here. And then after that push, we need to see the long push to the upside. We need to see what? We need to see the long push to the upside. Remember that we need to go back. We need to see where the price, where these guys wants to take or to grab another liquidity, according to weekly time frame. Okay. According to weekly time frame, let me check this. According to weekly time frame, let me check this. All right, according to weekly time frame, the price has to move like this to go back up. Your first TP will be here, according to these equal highs. Your first TP has to be here. Let me show you. Never ever miss this trade. Your first TP will be, sorry about that. Your first TP, all right. Let me try out this one. Is this long? Yeah, this is long. So your first TP has to be here. Okay, so I'm showing you how to take this trade. Or maybe you can hedge this market, you can hedge this market. Meaning here, the price has to keep going down like this, grabbing all the liquidity that is here before we see the shoot to the upside, taking out another liquidity that is here. So this is what is going to happen according to EuroCAD. Thank you very much, guys. I hope you really enjoyed this video. If drop the comment below and see and tell me what you think about this video so that I'll drop another one, so that I'll keep on improving. Thank you so much. The Peace of Africa is signing out. Have a good day.